We don't care at all what your credit score is, what you did, what mistakes you may have made. We just care about trying to get you to where you want to be. A true realtor in the market that's experienced, like you guys, will research that house and get all of the data on that specific house in that specific area.
What is one financial habit everyone should build?
Living within their means.
Yeah.
You know, that's our biggest problem, I think. I can't tell you how many times I've had to have the very, very hard conversation of, I'm really sorry, but you're going to need to sell the truck.
We're not looking at your credit. We don't know what your whole situation looks like, and leave it to the professional to tell you exactly what to do.
We're not trying to be pushy and sell you. It just truly puts you in a place where you fully understand what you can buy, because there's nothing worse than going and looking at the $400,000 house, falling in love with it, then going through underwriting and finding out, oh shoot, I can only afford $300,000 and now I hate every $300,000 house.
Welcome to the Homeowner Hookup.
Where we break down everything you need to know about real estate.
Straightforward, practical, and always up to date.
We're your hosts, Megan Huey.
And Sydney Ragusa.
Let's dive in. Hey, Sid.
Hey, Meg. How are you?
I'm good. How are you?
I'm great.
Sorry, I was just checking the mics. We got everything going? All right, we're going.
So
We're
we're
going.
recording. Can everyone hear us?
Yes, we're here. Mic check.
Mic check, 1, 2.
All right, who do we have with us today?
We have Melanie Coomer with Resource Financial today.
Yes.
Hey, Mel.
Welcome.
Hey, girls.
So we have used Mel so many times in the past. I mean, we use her all the time, actually. We love Mel. She is extremely creative and she is a phenomenal loan officer. And we are so excited to hear your point of view on the market and how you can help buyers right now.
Thank you. I love working with you girls as well. Very professional, always detail-oriented, always fighting for your customers. So really appreciate working with you guys.
Oh, thanks. That
We
means a lot
appreciate
coming
you.
from you.
Yeah.
All right, so let's start this off. I'm going to dive right in. Rent or buy in 2026?
My answer is always going to be buy. I think that you cannot afford to not buy. I think that there is no perfect timing the market in terms of rates and pricing. And if you don't get in, eventually it could be too late for you. And we're seeing that in the statistics already. So I'd like to share an example really quick. About 10 years ago, I had a buyer who came to me and had been renting. I think the rent was around $2,200. And they were really scared. They just were like, there's no way I can buy. And I talked to him and we went through everything, went through the numbers and sat down, and on paper, they absolutely could buy. They just had to take the chance and dive in. So they stayed in that house for 10 years. They bought the exact house that they were renting. At the time, they paid $290,000 for the house. And if you take a look, fast forward to 2026 to see what happened, that house right now, they could sell it for about $585,000.
Mm-hmm.
2022, kind of a higher point in the market, it could sell for over $600,000 as well. Okay?
Wow.
So what was the cost if they had just rented and they didn't buy 10 years ago because they were too scared?
Mm-hmm.
Just at $2,200, assuming the rents never went up, which we all know that's never going to happen.
Right.
Mm-hmm.
Yeah.
They would have given $264,000 to the owner of that house.
Wow. That is wild.
$264,000.
They would have
paid rent payment.
They would have bought the house.
Jeez.
100% interest, you
Yeah.
could call it, because there is zero equity, zero money going to principal.
And
Mhm.
now look at how much equity they have to play with, essentially, or they, could sell, refinance, whatever it may be.
So today, if they sold it for $580,000, they would walk away with $295,000.
Yeah.
Wow.
More. $295,000 is more than what they would have given in the rent and just washed it all away and let the other person have that benefit.
Yeah.
Mm-hmm.
And I feel like a lot of people, they don't know what they can qualify for. So I think there's a lot of misconceptions out there where it's like, they just don't know. They come to you, they're like, oh, maybe my credit score is too low, or they don't have enough money in the bank, whatever it may be. And you're like, hold my beer. I got you.
Yeah, and people say it to me all the time when they come in, they're just calling and I'm so sorry. I'm sorry for all these questions. And that's what we're here for, right? We're not here when you pick up the phone and talk to a mortgage lender you have to buy a house right now. That's not what we're here for. We're here to talk through it, to dive deep into the numbers and to make sure that you know exactly what you can afford.
Mhm.
So the very first step is just make the phone call and talk to a professional who that's what they're doing every day, right? I'm not going to try to perform surgery on myself and pull up a YouTube video and think that I know how to do that, right?
Right.
Call a mortgage professional, call a realtor, and just start to really dive deep into the facts.
Yeah.
Mhm.
So that you can make an informed decision.
What do you think stops people from doing it? What do you think is the fear behind it most of the time from what you see?
Sometimes people are scared because they're embarrassed of their financial situation or their credit score,
Mm-hmm.
but we see thousands of them a year, right? We don't care. We don't care at all what your credit score is, what you did, what mistakes you may have made. We just care about trying to get you to where you want to be.
Yeah.
Right. So we're not judging.
Mhm.
So take that off the plate. Do not worry. We've seen it all. I've been doing this for 30 years. Let me assure you,
You have seen
I've seen it all.
Yeah.
So never be afraid because we don't care. It doesn't.
And your job, even with credit repair, you have people who you can be like, okay, so you may not qualify right now, right? Worst case scenario, but these are the steps we need to make sure you do qualify in the future.
Yeah, and the time goes by so fast. It's so funny. We could start with someone and we might be able to get them ready in 2 months, right? There are people that, maybe it was a really big thing and maybe it takes a year, but I can't tell you how fast that year goes by. We always laugh when we're at the closing table. I'm sure you've experienced the same thing. You've worked with a buyer for years and they finally take the plunge and make the purchase. That time flies by.
Yeah.
So I guess I keep saying it, but my biggest thing I want to get across today is just you got to get in.
Gotta get
never
started.
get in and never get started.
Yeah. I feel like it's always like a lack of knowledge. Like not knowing and the unknown is a really scary place to be in. So when they go to you or like they come to us and they're like kind of ready. I mean, I feel like most people are pretty nervous to buy a house because you don't know what to expect. If you've never purchased a home, you don't know what to expect. But I mean, even my house, I bought it back in 2018 and I bought it for $275. And I mean, I can turn around and sell my house for close to $600,000 now. And I also think a lot of people don't realize there are so many like loan programs and different things that you can do, or, just creative financing that we can go through to get you in with minimal money down or no money down at sometimes. And if they don't know that, then they're like, well, how am I going to be able to afford a house? But most of the time when people are like, well, how are they putting down $200,000-$300,000 down payments? And it's like, it's because of the equity in the first home that they really were able to minimally put money in. They're usually using the equity to put into their next home to make it more affordable.
Right.
Because I mean, turning around, looking back at it, I would have kicked myself if I didn't buy my house back then.
Oh yeah, absolutely.
I mean, I would have been priced out of my area.
I went to college for accounting and I was working at a bank and I was selling investments, did mortgages. Finance is my job. And my husband said, we need to buy a house. And I crap my pants. And I'm in that work. So never be embarrassed to come to us because we're human too. I thought he was crazy. And the same thing, we bought the first house for $120,000. And then we sold it a couple years later for $300,000. And then we took that money and put it into another house. People sometimes say to me, they're scared because of the timing, I want to wait for the house prices to drop. What if I'm going to lose some money? We lived through 2008. I'm that old. And my husband's his company went out of business. My fourth largest bank in the United States went out of business, both of us in 1 year.
Wow.
And the house prices were starting to drop, but we sold the house. We made a good financial decision right away and we survived. But if we had never gotten in, oh my gosh, when he lost his job and I lost mine, we wouldn't have had a penny to our name if we had just been renting that whole time.
That just gave me goosebumps because I feel like that's I don't think 2008 will happen again, but it's one of those like no one knew. There was so much uncertainty. And I can't imagine like having kids during that time and both of us losing our jobs. Oh my gosh. Like
Yeah, I
What
would
you
love to
said.
touch on that a little bit. I've heard over the last like 5 years, another 2008, another crash, another all these things. Like
Yeah.
we're having a market correction right now. And honestly, we needed it after 2021 and 2022. Everything was just going up so high, so quickly, and it was becoming unattainable in a market. And I think what people don't realize is how strict the lending policies have gotten since 2008. I mean, they were giving $500,000 loans to people that scooped ice cream for $8 an hour, like, so the lending practices have gotten so much stricter. I mean, you agree with that, right?
Oh, 100%. And so that's why when you call your lender and they start to ask you for paperwork, you don't throw darts at us because that paperwork is because of those laws after 2008. So
Right.
we're held accountable to make sure that the person has the ability to repay. So
Yeah.
there's very, very strict laws on
It's so heavily
that.
regulated
Oh,
now. Yeah. And I think a lot of people don't understand how strict the lending practices have gotten and like, kind of holding your feet to the fires to prevent another 2008.
Yeah.
I mean, I get buyers that are like, oh, why are they asking me for this multiple times? Why do they need to do a verification of employment day of? I gave this to them 3 times and I'm like, it's all for verifying purposes. So like and I know you do too, whenever we have a new buyer come in and we're like, all right, so if the lender ever asks you for anything, I was like, just keep it in a file. I was like, because the likelihood is they're going to ask for it again. Like, and we know it's irritating, but you and I have both purchased homes. So we know like, they asked for our tax return multiple times and it just kind of is what it is. But like, I get it. I would rather them do that than give loans to everybody and us go through another market crash.
Which is true, which is very true. And it actually protects your investment and the equity in your home,
Mhm.
So what I'll say to that too, sometimes with the paperwork, people think that they're sending the same thing. And what will happen is they'll send fractions of
Mhm.
the forms, right? Or they'll send pictures of the forms. And so again, because of 9/11, there was a lot of money laundering that happens with houses, right? And so they're to protect against terrorism and other things, bad things. They want to make sure we know where the money is coming from. And so it's really important that we have the whole document because you can't believe how many. I had a realtor one time try to give me documents from a borrower that when I saw it, that there was no way that document was real. Like they tried to fudge it, the customer. Wow. And so that kind of stuff happens all the time, sadly. So when we're bothering the people for the paperwork, we have to have the URL address at the bottom. We have to have every page, even if one page is blank, because they want to see that it was a complete document because of all the people that unfortunately commit fraud.
Yeah.
You learn something new every day.
Yeah. I feel like, do you see things still to this day that surprise you? Are you like...
we have to do continuing education every year for the mortgage license. And part of that continuing education every year are examples from the previous year of fraud that took place.
Wow.
And every time, every year when I read it, it's like mouth to the floor. Like you can't believe somebody did that.
I feel like we end up going through that with ethics because we have to get our license renewed every 2 years. And when we would do the ethics thing, they always give us examples during ethics. And I'm like,
oh my gosh.
Woof.
There's actually on social media, it's a big one. There's a lady who teaches the ethics course. I think she comes from Sarasota.
Mm-hmm. Oh, yeah. I've taken her courses and
she will report you. Like she will report agents and just go through their social medias and be like, nope.
Hey, someone has to hold them accountable. I mean, honestly, like.
I'm glad you brought that up. I'd love to mention something really quick that we're seeing so much right now. The amount of solicitation that's going to buyers in the mail is unreal. And the amount that is not accurate and that is very misleading is insane. So if you do get something in the mail and you're wondering, is this a good deal? Before you call that number, I would call a trusted professional that you know. Everybody that you know knows a mortgage person or a realtor.
Mm-hmm.
I mean, right? Yeah. Everybody pretty much. And if not, you can find us online. But call a trusted person, not that number first, and have them take a look at it. Because I constantly have my past customers will send me mail and you read the back of it and it is so disgustingly misleading. It makes me so upset. So always check it. Check it with one more person because unfortunately, there's a lot of that going around right now. And that's simply because there wasn't as much business in 25, right?
Yeah.
People weren't taking the plunge as much. And so lenders were just trying to refinance and try to make money where they could. So definitely reach out to a trusted professional.
Yeah, for sure. I got an open door offer in the mail. I said, let me just go ahead and open this and see what it says. And I'm
Was it laughable?
Yeah.
Yeah.
Yeah, it was.
Yeah.
Cody's like, why do they think our house is not worth anything? I'm like, it's just what they do.
Yeah. I got an open door offer on my house too, but it was like last year and it was atrocious. It was like $325,000. I'm like,
yeah,
not even in a foreclosure.
Mine was
not even in a foreclosure.
Yeah, ours was less than what we paid for it, but it wasn't crazy. But regardless, like you said, we're having a market correction. I had to explain that to him too. Like, we're having a correction right now.
Yeah, yours is a long-term hold.
Yeah,
for sure.
It's at least, when you buy new construction, it's at least 7 years.
Yeah,
at least
yeah.
7 years.
I'm at the 8-year. I'm at the 8-year mark.
Yeah.
Wow. I know. I'm like starting to put money away for all the new systems. I'm like, roof, AC, water heater.
It's about to happen.
I'm like, oh God, that's all gonna go.
I'd like to make a point about that as well. Recently, I had a father reach out to me from out of state, and he felt like the realtor wasn't advising his child correctly in how they were setting up their offer. And I think, again, it's another reason why you're not wanting to deal with these open doors and these, we'll do it for 1% commission people, because they're just trying to get rid of the house as fast as they can and make money when they can.
Yeah.
A true realtor in the market that's experienced, like you guys, will research that house and get all of the data on that specific house and that specific area, because everything isn't the same. So this gentleman who is in Texas is upset because his daughter is putting in a full offer price, but the house is $240,000. Well, in our market here, at $240,000, might I add, all the systems were replaced. The roof was replaced. Those type of houses are highly marketable in our market, right? It was move-in ready. She didn't have to upkeep anything later.
Yeah.
So if she didn't go in a full offer price, she would have never gotten that home, because there was 4 other offers on that house.
Right. Yeah.
And so that's something that, you can't generalize and think, well, we're having a market correction, so I should just low offer everybody. No, in a house that's fully renovated, beautiful, everything's up to date, you're probably going to be paying close to that offer price to get that house right now.
Easily, if not over. I mean, we've been in multiple offer situations several times in this market still. Yeah. I mean, it really depends on area. Jacksonville, Northeast Florida has so many different little pockets too. And like, it's crazy how different marketability is in those little pockets.
I've had 5 multiple offer situations since December. And the interesting thing, when I talk to agents about it, they're like, what price point was it? It's all different price points, to your point. So I had one that was 1.3 million and they had 6 offers. 6. 1.3 million.
Yeah.
Right? I had another one that was 350,000 and it was 5 offers. And then I had in between, the smaller 200s and 400s. But it's interesting, like you said, it's not a certain price point. It's not a specific area. It has a lot to do with the house shape, where, the community, how fast things are selling there, if there's new construction that they're competing against. There's so many different variables.
Yeah. Like in my neighborhood, there's so much more new construction all around us. So everything is sitting on the market. It's much harder to sell in there. But you move into Fleming Island. Now, there are some that have been on the market for quite some time, but ones that are up to date, maybe has a pool, whatever it may be, that people, they upkeep their house nicely. Those things will go like that. So
I don't know if you guys have seen this, but I sort of feel like since COVID, I've gotten so many more buyers that want pools.
Yeah.
Before.
Yeah.
100%.
Pool homes go quickly.
Yeah.
Now. Yeah. As long as the pool isn't like trash.
Yeah. Decent shape. Yeah.
Yeah. We had one.
Sorry, that made me giggle.
We had one that was like actually falling.
Like it was like literally like it was cracked and like towards the back, and it was like falling, like
completely like going in half.
It was like cracking in half.
Yes,
basically.
It was on a hill. It was like a whole situation where we were like, oh, okay.
Well, we're just going to take this on the chin and keep it moving.
Yeah.
Yeah. And that's another important reason why you need a real estate professional, because they'll know that there's certain loan types that aren't going to take that type of house. And the pricing and how you're going to market that house is going to be very different, because the amount of buyers that can fit into that mortgage pool, right, is much smaller. So it's very important that you listen to your realtor in those cases, because they know what you're up against.
Yeah, for sure. Let's bounce around to what is homestead exemption and how does it work?
Yeah, great question. So homestead exemption in the state of Florida applies to the entire state of Florida. So the really neat thing is you could move from St. Johns County all the way over to Sarasota and it still applies. And the best thing about it is it protects you from creditors. So if it's your primary residence, you can file for homestead exemption and they can't kick you out and you can stay there as long as it's your primary residence. But the really neat thing, and the other reason why buying is so much better than renting, is your taxable value is capped at a 3% increase per year. Okay. That doesn't mean that your taxes cannot go up more than 3% per year. There's a misconception with that. If the millage rate changes, and you'll know because you'll see it on the voting panel when you go to vote, if the millage rate changes, then taxes can change. If there is a CDD, there's what's called an operations and maintenance charge that can change slightly each year, and those do show up on a tax bill as well. But the taxable value, the amount that they're taxing you against, that number cannot change, not go up more than 3% per year. So over time, it adds up. So that same buyer that we talked about that was renting for $2,200 and was given $264,000 to the landlord, when that buyer bought and kept the house for 10 years going into 2026, I pulled their tax bill the other day to give an example to a buyer. They had over $112,000 in tax savings that had accumulated during that 10-year period. And basically, that's the difference between what the property appraiser says your just market value is, what he thinks your value is, and what your taxable number is. Because it could only go up 3% per year, but those house values went up way more than 3% per year, right? We went from 290 to, what did I say, 580,000. So that 112, now they can take that along with their equity, as you mentioned, to put it into the next house. So now if they go and buy a house that's more expensive than the one that they have, let's just say they buy, $500,000 or $600,000 house, they take that 112 right off the top. Boom. You're not taxed on that amount of money, which is awesome. I had one buyer, when I calculated his portability, he had $170,000 in portability that he was bringing to his next house. That's a lot of savings, right?
Yeah.
So anyway, the homestead is very, very important. So the key things to know about it is you have to file it by March 1st, preceding the year that you purchase. So if you buy right now, one of my buyers was all scared because they're buying in February and they're like, I have to make the March 1st deadline. The deadline for somebody buying in 2026 is March 1st of 2027.
Right.
Yeah. And the portability and homestead, you have to file for those. So every time you move, you need to make sure that you're applying the homestead to the next house.
Yeah.
So that's really nice advantage that we have in Florida.
So what happens if you downsize?
Great question. So if you downsize, you get to keep the same percentage. So I had numbers for that customer. So that customer's taxable value was $314,000, and the just market value, the amount that the property appraiser was calling the house, was $477,000. So they would take the difference between those numbers and the percentage that you have of savings, which was 27% in this person's case, applies to the next house. So if you bought a $300,000 house, they would take 27% off of that number and tax you at that number. So you don't get the 112, but you get the exact same percentage that you were taking advantage of at the other house.
Okay.
That's really interesting. Mel, what do you feel are the biggest myths about interest rates?
I think the first one that I want to address is that people think mortgage rates are too high. Even when they were at the top of the sixes, low sevens, people were freaking out still, right? But if you go back to the 1970s, I was born in the 70s, so, I'll use that number. Now you know how old I am. If you go back to the 1970s, the average mortgage rate has been in the high to mid sevens. Okay, so all that period of time, and we've all heard of the 80s when the rates had gotten up into 18% range. All of that time, over 50 years, high sevens.
Yeah.
Right now, today, we're in the low sixes.
Yeah, we're below the
I thought we were
average,
below,
right?
yeah.
Yeah.
Yes. So definitely
Not
high rates.
No.
And the other interesting thing, and that goes back to my investment days, I feel very strongly about that as well. You know, investing in the market and for retirement is so important, but real estate is equally important. And if you hold your investment for 10 years, and it doesn't have to be 10, but just on average, if you were to look at a stock investment or a real estate investment over a 10-year period of time, you're making money.
Yeah.
You're making money. And there will be highs and lows, right? But we can't time that perfectly. So you just have to get in, as we talked about before. The other big myth is that everyone thinks that the Fed changes mortgage rates.
Yeah.
Every time the Fed is meeting, I get the phone call. I have to lock right now. No, where are you? Call me. We don't, because the Fed doesn't change our rates.
Yeah.
The Fed meets about 8 times a year.
Mhm.
And we get a lot of commentary that comes out ahead of time from economists that are looking at, you know, what is inflation doing? What's the job market doing? Things that are happening overseas can affect us, of course. Obviously, COVID affected us, right?
Mhm.
All these things play into what the Fed is going to do. Sometimes if things are fairly stable, then we have a good indication. So the end of 25 is a perfect example. People would call me on the day that the Fed met because they'd see something on the internet and they'd be freaking out. Well, they already missed the boat, because what the Fed did that day, if it was going to affect mortgage rates, it already affected it a week or two before, because economists had already pretty much predicted what was going to happen. They felt like a very high percentage that the rate was going to go down. So mortgage rates fluctuated prior to them meeting. So that's kind of interesting. So long story short, the Fed changes the Fed funds rate. So if you think of credit cards, car loans, home equity lines of credits, those are all tied to prime, and prime is affected by Fed funds rate. Mortgages, 10-year treasuries. What affects the 10-year treasuries? Stock market, what's happening around the world. How do people feel about the economy right now? You know, if the economy is rolling and everything's going really good, people are investing in stocks. They're not putting it into the treasuries. So the effect on the mortgage rates will change when the stock market's doing bad. Now people are taking their money out, they're throwing it into the treasuries. We're going to see a change in mortgage rates. So what's going to happen in 26 with these cuts that the Fed is? We don't know. Nobody has a crystal ball, right? We'd all be millionaires.
I feel like we get that question so much. And like everyone gives an opinion, but that's just what it is, an opinion. No one really knows. And I feel like a lot of people come to us and like, what do you think is going to happen? It's like,
We don't have a crystal ball.
I'm told they're going down, but I've been told they're going down forever and ever.
Yeah.
So, it's one of those things where it's like, I can say what I think, but that doesn't hold much weight at the end of the day.
Yeah, it's true. It's true. The Fed, this year they're thinking maybe it'll drop 2 times. Who knows? They're saying maybe April, maybe September. And the important thing to remember about that too is, wars and things that happen in other countries, things that are happening overseas, that can affect us and what happens with those rates also. So there is no 100% predicting anything. I just think that you have to start investing to long term.
Yeah.
Have the growth and the
like just get in and then we can figure the rest out down the line.
Yeah.
Yeah.
You know what they say, marry the house, date the rate.
Yeah.
Seriously.
They do. And I think a lot of people also at this point in time, when they keep waiting for the rates to go down, it's because they have COVID so clear in their mind still. And they just keep thinking back to that time and it's just not happening.
If I hear another person reference COVID, I may blow my brains out.
It's like, it's intense. It's
yeah,
just wild.
I know, but it's just not. It's not going to get back there. So we really need to get out of that mindset of
waiting for it.
Yeah, I'm going to get a 2.5% interest rate.
Not going to happen.
No.
Yeah.
Not going to happen.
And also the other thing is that those people with those interest rates really don't want to sell.
No.
So there's that,
My interest rate is incredible. I'm not selling right now. I mean, honestly, I don't have a reason to sell, but
why would you?
Why would I?
Yeah.
It's an interesting point because I'm there too. I have a really low rate, and we've been in our house the longest I've ever been in a house in my entire life. But I will say, to that point, if you wait too long and the rates start to come down a little bit more, which they say there's still a little edge there, there are people like me who have those killer rates, but have had them for a long time, and we're just itching to get out.
Yeah.
Because we've stayed way longer than I would have ever stayed before because of the rate. But now my kids are about to go to college. I want out of that house. So we're going to start to see some of those start to turn.
Transitions.
And then as they get in the market, you're competing against them. And so waiting for a specific rate or the best to wait till the rates drop to the lowest, you could be really seriously hurting yourself because you're going to be fighting and paying a higher price for that house more than likely.
That's a very good point. Because that's something that recently happened in Fleming Island with a multiple offer situation. And they had cash. They were like you, where they sold, they had a bunch of cash, and they can go ahead and just purchase it outright because they, had so much equity in their house and they stayed in it a long time. So
cash is king. So when you're trying to compete against them,
Yeah.
Wow. I just also don't really have a reason to move right now.
Yeah, and your kids are younger.
My kids are young. Like,
You're
I just
in a
want
different life
consistent.
situation.
Yeah, but I mean, I do feel like in Northeast Florida, I mean, a lot of people are going to be transitioning into a different part of their life, and I would probably be itching to go to my house too.
Mel. That's a really good point.
And the other thing too about Northeast Florida, where we are, we're very fortunate that we are still the cheapest when you're looking at the other big cities in the state of Florida. You look at Miami, Orlando, Tampa. My husband is a general contractor. When I met him back in 2000, he was building in Orlando. And back then, 26 years ago, I was like, holy cow, there's so much construction. This is crazy. It's still happening.
Yeah.
26 years later, Orlando is still building. It's crazy.
Orlando will never stop building, though.
It's crazy. So anyway, the price is there. Tampa, Miami, we still have a lower price point. And I think that it's a great investment in our market area. I think we're very lucky because I feel like we're in our infancy of growing. We're still, maybe a lot of the local Floridians will be very upset that I said that. But unfortunately, that's just the reality that, the growth isn't going to stop.
No, it's going. It's booming right now.
Yeah.
Yeah, there's a lot of big plans for Jacksonville. So I think it's exciting.
I think it is awesome. Too, yeah.
Yeah, but if people don't really want to live in a big city, then it's kind of like,
Yeah, but I feel like you still have Callahan and Yulee. Like, you still have pockets where it's so convenient to get into Jacksonville, but you still really get that, secluded rural lifestyle that you could potentially want. I mean, hell, even Middleburg and Green Cove.
Yeah.
You can still get it there. You can go to Palatka if you want to, and you're still very convenient into Jacksonville or into St. Augustine.
Yeah. Green Cove's getting more and more sparse with all the new construction.
Oh, gosh, yeah.
Palatka's right there.
Yeah, well, I feel like in Green Cove, there's still so many privately owned, large parcels that there's just not really room to build anymore in Green Cove.
Unless the builders buy them.
Unless the builders buy them. But I feel like a lot of them are holding right now, like generational.
I was going to say generational. I'm seeing a lot more people buying the big plots of land further out and having multiple family members, houses,
compounds.
Seeing a lot of that.
I love that.
I would love to do that.
Yeah. I have some friends up north that did that with their family. And I think that's really cool. I'm not sure I could do that necessarily.
My sister-in-law has that.
Yeah.
She's got her in-laws and then them, and then a brother and sister.
Great
and they all live
for
on the
babysitting.
Same. Yeah. Yes, it is. Convenient.
I'm like, I
Very
already told my parents, I'm like, you're moving in with me whenever you get to that age. Like, you guys are coming to live with me. It's happening. I will make sure I take good care of you. But I do think it would have been really cool to have them, especially at this time in my life, or when my kids were a little younger, like right there.
Yeah. That brings up another good point. Just in case people don't realize that this can happen. I do a lot of new construction for builders. When they can't get something done, they'll send it to me. And we had several buyers in 2025. I think we had 4 maybe where multi-generations bought the house together and it was just one house. Not everybody has the money to buy the big plot of land and or maybe it's not convenient for them location wise, but you can have multiple family members be on the loan. So we had 4 in several of those cases where, it was 2 sisters, the dad, and a brother-in-law, and they were all on the loan together. So the person had, gone to the builder said it couldn't happen. They called their bank. They said it couldn't happen. They came to us. That is something that you can do. So if you're just trying to get in and get started, perhaps look at that, with another family member. The National Association of Realtors this past year had put out some data and it was very alarming. The first-time home buyer average age is 40 years old now.
Yeah.
And second purchase being 61, I believe. And the thing that is most alarming about that is they're very scared for generational wealth in the future, right? So whereas people could, maybe when I was a kid, ask a family member to perhaps help, 20 years from now, they're worried, will that family member be able to even help, right? The older family member, because they didn't get in. They never got into the real estate market. So that's something interesting to think about, So I think looking into ways to get down payment assistance, people think that it's only for first-time home buyers. I had a closing with you guys in December, and the buyer was not a first-time home buyer. But we were able to get her the down payment assistance that she needed to be able to get in, to get into the market.
Yeah, absolutely. That's an interesting point. I wonder why, because I think people think that it's just unattainable or not affordable to be able to buy a home before that age, but it is. I think it's just maybe not knowing, or maybe the parents aren't pushing people to do that anymore. I don't know. I know my parents, they were like, you need to buy something. When I remember my dad having that conversation with me in my 20s, and I was like, why would I do that? That's too much responsibility. What if something breaks? I didn't want to. But I'm looking back, I'm like, Megan, that was so dumb. I just wonder why people are waiting. Is it because they can't afford it? Is it because they don't know? Is it because their parents maybe weren't pushing them in that direction?
I think there's so much media hype and scare about things too. And I think that people need to make decisions that are based on their situation, you know, and go and find out and get the details, because oh gosh, I'll never forget, a couple years ago before COVID, there was on Jacksonville, there was an apartment complex that was on the news because they were price gouging so bad with the rents, so bad. And just before that happened, I had an elderly customer come to me. They had never bought before. They were 70. And we got them into a house. And she called me after that thing went on. And she said, I lived there. My rent would have been, my rent would have been through the roof. I would have never been able to afford it. I don't know what I would have done. Mm-hmm. So, they were older and it's just nobody ever showed them. In St. Johns County, I just found out, and I'm sure it's going to go to other counties, or maybe it is, I don't even know, but they're finally adding personal finance to a requirement to graduate. So finally, they're going to teach high schoolers about this type of stuff. And I think a lot of it has to do with just getting the true facts and not listening to all this, the mortgage rates are high or you can't afford it.
Yeah.
We can very often find a way. It's very not, it doesn't happen very often that we can't figure out a plan, to get somebody in a house within a year.
I think generationally, the people, Gen Z is a little bit out of touch with reality in some ways, and not that I'm generalizing it, but and just
what's hard work.
Well, no, not in that, but yes, over consumerism for sure. They're stretching themselves thin. They are very and I'm not generalizing this. I know a lot of Gen Z people are great and very financially savvy, but I think a bigger majority of that is what's on TikTok shop. They want the latest drops, they want all of these things, and they want to be able to showcase that they look like this, but they're going to go home and live in, their guest room at their parents' house. And also they're my parents bought their first home for $100,000. And, that's crazy. But like also the minimum wage when your parents bought their first house was like $5 or $4.
Right.
Like, you have to also look at it that way, of the minimum wage now. And minimum wage is a starting position. Like you cannot usually buy a house on minimum wage. It's very seldom.
I think also, like, at least in my generation, I would say college debt is very high.
Mhm.
And I think it's like, I remember my mom told me that she paid every other semester for college and her parents paid like every other, helped her out in that way. There was no way anyone could be paying every other semester when I went to college. It was way more expensive. So I think a lot of people have student loans, which leads us into debt to income ratio. What is one financial habit everyone should build?
Living within their means.
Yeah.
That's our biggest problem, I think. I can't tell you how many times I've had to have the very, very hard conversation of, I'm really sorry, but you're going to need to sell the truck.
Yeah.
You're going to need to sell the SUV because the $1,400 car payment
Is killing
when you don't own a house already, that is not a priority. I literally had a guy hang up on me one time. He was an older gentleman and he didn't want to give up his truck. And his wife was crying to me like, I need a house. And, I had to talk to him and say, look, give up the truck just for a little while.
Yeah.
Get the house, start building the equity, and you can get those pretty nice things that you really want to have that you see your friends or somebody else has, or you see it online. You can get those, but maybe just a little later.
Yeah.
Why are you in such a rush?
Yeah.
Start making a good sound investment early and usually keep about 30% of your income. If you could not touch about 30% of what you're making and you start that off when you're young, you'll be so surprised at how you just fall into play with that and that becomes a life habit.
Mm-hmm.
And, I see customers like that all the time where they're just adamant. They don't care how beautiful the house is. I said, this is what the payment will be. This is the percentage of my income. That's it. And those people are doing really well, So I think just not trying to stretch it so much. Typical debt ratio is 50%. If you're buying, you're using a conventional loan, typical is 50%. FHA and VA are going to let you go much more over that, but I wouldn't.
Mm-hmm.
Yeah.
I would stay below the 50.
Mm-hmm.
If 50 is the benchmark for conventional, probably you should stay within that if you can,
Yeah, it's a safe place. It's a safe place to be able to qualify. If someone wants to buy in 12 months, what should they do today?
I would highly recommend them go see a lender and have them do a soft credit pull. Most people don't realize, but we can do soft credit pulls. It does not hurt your credit. Not going to show up. It's not an inquiry. And that data gives us what we need. We will know what your score is. We'll know what your monthly debt payments are, and then we can make a plan. People want to wait until the 11th hour. And during COVID, and I think we're not going to have a COVID time again, but I think we are going to see more and more of the multiple offer situation come up over the next year. I really do. So it's important that you're ready ahead of time, months ahead of time, right? Because then when you find that house, we all know how fast it moves, right?
Mm-hmm.
And people constantly wait until, I'm going to go looking next week. So let me start on Friday. I'll pull my application. There's so much paperwork and so many things we have to go through. So start 12 months ahead is great because then we can also see credit problems.
I was going to say also like their full credit profile. I know that that's really important. We were working with someone together with you that was really hard because of the credit profile. So even when you got the credit up, there was this over here. And it was a mixture of things. It's not just your debt to income ratio. It's not just your credit. It's not how much, you have for down payment. It's a mixture of all of it.
Yeah. Yeah. And one big thing people think is I'm going to get a mortgage, so I'm going to pay off these credit cards and I'll close them out. And that takes away all the good history.
Yeah, don't do that.
So very important to leave
Pay
those
them
things
down,
in place.
leave them open.
Yes. Yes.
Or really just wait until your loan officer looks at it and tells you exactly what to do. I mean, we've been asked do we do this now? Talk to talk to a lender. Please go talk to your lender.
That is such a good point.
Have them tell you what to do because we're not looking at your credit. We don't know what your whole situation looks like. And leave it to the professional to tell you exactly what to do, because what, are you going to rob Peter to pay Paul? And sometimes you have to do that in order to make it work, just so it looks better. But you really should talk to a lender before you go and pay anything off.
I always say it's like a puzzle. And what people don't realize is we can get you an approval with a plan, and the assumption is this is going to get paid off at closing. It doesn't have to get paid off right now in order to get you into that house. We can actually structure it where the title company will make that payment at closing, and that payment will come out of your debt ratio for approving purposes, and you don't do it ahead of time. And sometimes if you do it ahead of time, people don't realize too, an installment loan has a different ratio within your credit score, right? So it's weighted differently. And so you want to have a mixture of credit, right? So sometimes people will pay off loans ahead of time, and sometimes we didn't even need them to. So on a conventional loan, for example, very often if the payment is down within 10 months, we don't even have to count it. So that buyer didn't have to pay that out. And they could keep that money to help us to have what we call reserves. Reserves is very important, especially if you have some credit concerns. Reserves is, can this person make a payment if they lose their job tomorrow? Do they have rainy day money? And that could be in 401ks or savings accounts. So we might need that money for reserves. And now you just spent it on paying off a loan that I didn't even need paid off to get your debt ratio in line.
So number one, talk to your lender.
Don't do anything until you've spoken to a lender.
Yes. Don't even look at houses till you've spoken to your lender.
And we're not trying to be pushy and sell you. It just truly puts you in a place where you fully understand what you can buy, because there's nothing worse than going and looking at the $400,000 house, falling in love with it, then going through underwriting and finding out, oh shoot, I can only afford $300,000, and now I hate every $300,000 house, right? And it's so much more stressful. So we're not saying it so we can be pushy. We're saying it so we can make the plan for you and be give you the information you need to make the right decision.
We're also trying to keep you from being disappointed later on.
Yeah. Temper your expectations.
Yeah.
Or make them just realistic.
Yeah. Give you realistic expectations.
Yeah. Okay. So I think we're on our last one now. Yeah. Can you give us some examples of buyers who may think they cannot buy and the programs that might be available to them?
Lots of different loan types out there, right, for mortgages. But there's this whole other little avenue that is called non-QM, right? Non-qualifying mortgages. And basically what that is they're not sold like Fannie Mae. Your mortgages, a lot of people will say, oh, my mortgage got sold. Well, these non-QMs, the investor backing that loan is making the decision. So they have their own rules, right? And so you might not fall in the box of a conventional loan, right? It may not fit that box. So this year we had a number of customers where we were able to get them approved using these other products. So in some cases, you can use the potential rental income for the investment product. So if you're looking, I really want to get into investing, but I don't know, how to buy a house and hold it as an investment. I'm a little scared. We can show you different products for that. There are fix and flip products that allow you to buy the investment property, gives you the money to fix it up because you know that the house needs the TLC. And we just talked about those houses that have the new roofs and the new water systems and stuff. Those are going faster. So there's fix and flip loans where you can get that money that you need to make the investment, fix it and sell it and make some money. Then you take that money and you go on to the next one. So a lot of people don't realize that. There's bank statement loans for the self-employed people where we can look at their deposits every month.
Thank goodness.
Thank God.
Yeah. So, and there's just a lot of different products out there. So again, if you think, or even if you've heard from another lender that you can't do it, especially a bank, not to say anything negative about banks, but I started in banking. That's how I started my career. And I just always thought you went to a bank to get your mortgage until I needed one. And the bank was dragging their feet and the seller said, you got 2 weeks or we're giving it to somebody else. And I went to a direct lender, which is what I do now, and they could close me in 2 weeks. So banks are going to be conservative, right? They have deposits that they have to worry about. They have deposit customers that they're concerned about. And so they're going to have a much more rigid box than a direct lender or the non-QM product, for example. So again, I would just encourage you that even if you think you can't, pick up the phone, have that conversation with a direct lender, broker, somebody outside of the banking world as well, in addition to not saying anything bad about the banks. I'm just saying, ask around.
Yes. Yeah. And that's why we always suggest going to a broker, because you guys do have these programs where you can look at someone's individual situation and tailor what you feel like is the best for them.
Correct.
Yeah.
Yep.
Thank you, Mel. We
You're
really
welcome.
appreciate
Thanks
it.
for
This was
having
really,
me.
this is awesome.
Yeah, this was super informational. I think really educational. I think anyone who listens to this or watches it is going to be
Very
well
thankful.
informed.
Yeah.
Yes. Thank you so much for your wealth of knowledge. We really appreciate you.
Yeah. Thanks for what you guys do. You guys are amazing.
Oh, absolutely. Anytime.
All right, guys.
Bye.
Bye.